Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 11th November 2020. Talking about the international market, US Treasury yields were flat to slightly higher on Tuesday as the markets consolidated the previous session's strong gains, fueled by news of a potential coronavirus vaccine. US 10-year inched 2 basis points up, closing at 0.98 percentage points, and 30-year also up 2 basis points, closing at 1.75 percentage points. German 10-year, which was at minus 0.60 a week back, is now minus 0.47%, in line with US Treasury. In the crude oil market, crude is now trading at $44.86 per barrel. As the crude oil rally will halt here now, so we advise our long-term investors to square off their position with a 15% gain in 2 weeks. Again, structurally, we still remain bullish on crude with a $50 per barrel target. Crude's short-term range seems at $41 to $45 per barrel. In the currency market, dollar index DXY is at 92.66. DXY's today's range is 92.32 to 93.115. All the downside will be limited for the dollar index now until the new fiscal stimulus talks resumes. New fiscal stimulus, if any, will take the dollar index below 90. Otherwise, markets will be range bound. USD INR with a low of 73.93 closed at 74.24. USD INR's range for today will be 74.15 to 74.40. We expect 74.20 to act as a center point, and USD INR prices will hover around in the range-bound market. In the domestic market, following the global peers, 577 GS 2030, the 10-year benchmark ended 592 versus 588 yield. A consistent close above 592 will take the yields to 597 or 6%, which is a big psychological barrier. Also, traders are not taking any big positions in this festive season, along with CPI inflation print due on Thursday. CPI in September was 7.34 percentage points. Let's do the 10th November 2020 SDL auction analysis. 10-year Karnataka at 647, Gujarat at 650, Rajasthan at 661. It seems the SDLs have already made a low of 640 range in auctions a couple of weeks back and now inching higher slowly. The demand for SDLs remain weak, but the yields will not rise so swiftly due to RBI SDL OMOs. A recommendation: we already had recommended to sell SDLs at 640 to 645 levels 3 weeks back. Now, if vaccine becomes a reality, we wanted to sell all your long duration bonds as well within next 6 months. If 10-year yields may inch 30 to 50 basis points in a quarter or two, we should keep an eye on global yields, COVID-19 vaccine, credit offtake, and growth revival in India. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.